I am privileged to be involved with many of our portfolio companies at Sapphire on a board level. And I must say that one of the top conversations that we've been having this year has been growth versus efficiency and understanding that balance and the trade-offs. It doesn't feel that long ago in 2021 when the core missive and mandate for every VC-backed company was grow as fast as you can, right? All your investors were probably telling you that, us included. And now that we're sitting in Q4 of 2023, the world's in a very, very different place. So this panel is all about diving into the nuances around when you should deploy a go-to-market strategy that is hyper-focused on growth while relaxing maybe some of the other boundaries that you might have set up versus delivering more of a balanced, efficient, and durable growth scale. I'd like to have all my panelists introduce themselves because they have very, very rich backgrounds. Please tell the audience a little bit about your current role and your current company, but also mention some of the other companies you've worked with in the past.
Do you want me to start? Yeah.
Yes.
So I am COO at Culturamp. You may have already noticed that I have an Australian accent, so I'm here from Melbourne. And prior to that, I worked outside of the technology industry. My previous role was as a CEO of a bank. So I've worked in financial services for close to 30 years. I'm aging myself. So have been working in the SaaS industry and the technology industry for about 3 years. Interestingly, one of the things that I've learnt over the time is that the models are all the same. We run very similar models across both industries. The naming conventions are very different. So, I have sort of a dictionary on either side, and I'm often testing, is this model the private banking model or is this the retail banking model? But all the methodology is the same. It just comes with different naming conventions.
Great. I'm Courtnee LeClaire, and I actually think I'm an alumni of Sapphire. My last 2 positions have been placed because of Elizabeth at Sapphire, so big props to Elizabeth and Ronnie. I am currently the Chief Marketing Officer with Own Company, formerly known as Own Backup, 2 weeks ago. We just took them through a rebrand. And I think I'm a serial industry hopper. I have never worked in the same industry more than one time. So I started my career at Apple, launched everything that matters. And then I went to Disney, I went to Intel, actually went to the 49ers, the Oakland Raiders, did some work at Intel with the 49ers. I went to the Oakland Raiders as Chief Marketing Officer. And then my next role, again, placed through Elizabeth, was with one of Sapphire's portfolio companies, Livongo, that we were able to take public very shortly and then were acquired by Teladoc. So Elizabeth grabbed me back out of semi-retirement and placed me at Own Backup with now. We are in hyper-growth mode. I have not been at a company in my life that hasn't been in hyper-growth mode. So I'm really interested to learn and talk to my peers and my friends here.
I'm Ryan Azus. I've been very lucky to see some of the cycles that the earlier group talked about, and also be in a lot of growth in tech in the last 20 plus years. I originally started at WebEx, carrying a bag, a gazillion years ago, when it was employee 200 there, and watched that company go public and stayed, for almost a decade through acquisition with Cisco. I went to a company called RingCentral at the time that had about 30 people in the US to really kind of start and run and lead the sales and scale that, and was lucky enough to get to about 800 million, about $1 billion run rate of ARR there, and then left that to go to this company called Zoom that joined about a little less than a year before the pandemic, and saw with Laura, who was just up here, some very extreme, beyond what I was used to even, growth during that time. And then as about April last year, I stepped back from my role, and I'm in what you might call a gap year, or to be determined, but really just taking time. And so really just kind of focusing on me, and doing lots of things I haven't been doing over the last 20 years, and just kind of waking up and deciding what I do every day, and enjoying that at this exact moment. So.
Just wait for Elizabeth's call. It's coming.
Yeah.
Gap year sounds pretty amazing, I have to say.
It's pretty nice.
Yeah. Hey, everybody. I'm Myles Kleeger. I'm currently the President and Chief Commercial Officer at Braze. We are a customer engagement technology platform selling primarily to consumer brands, consumer marketers, either B2C or B2B2C. I've actually spent my whole career in marketing in some way, shape, or form, either in the media world, the advertising agency world, brand strategy world, and then eventually got into MarTech and SaaS. My first SaaS business was a New York-based startup called Buddy Media, which I joined early on. Scaled up into the enterprise specifically. We sold with the Salesforce. I spent about 3 years at Salesforce, right when the mobile explosion was going on. So this is now in 2014 or so, and joined another very early stage New York-based startup called Appboy, which is the worst name of a company in the history of companies. But we eventually were able to change it. Same company as Braze, and 9 years later, I'm still there leading all the different revenue functions.
Awesome. Ryan, I'd like to start with you,
Yeah.
right? You joined Zoom fall of 2019 and saw the spectacular growth during COVID and the leveling off afterwards. Talk to us about that and what was going on inside of Zoom.
Oh, what wasn't going on? Chaos is the wrong word, but it was a lot. I mean, ironically, I joined Zoom. They had already had a fair amount of success, but to really help it scale to the next level. And was in the middle of instituting a lot of those changes and next level. How do we scale, continue to be repeatable, and go? And then there was a point, of course, with COVID that was kind of like gasoline on a fire. And for a while, it sounds like, for especially a lot of marketing and sales leaders in here, COVID wasn't. It was definitely something that was unfortunate for the world and those around us. From a selling point of view, it sounds like you're having quarter end every day. And that might sound like a dream until it actually happens. And it's a little like Groundhog Day, because you realize in a typical life, there's these cycles. You build towards a quarter, you close a quarter, you're rebuilding and adjusting pipeline, you're working towards the next, you're planning ahead. And when it just comes and it's nights, it's weekends, it's nonstop. And at that time, the biggest challenge was really people. At the end of the day, company was scaled, but not for what was happening. And every business process, everything that ever we had, it didn't break, but it was stretched. And people gathered together to make it happen and really pull together and do some amazing things. And then, of course, that does wean off, thankfully for the world, and other things. And you see other sides. And, luckily Zoom, it was and very much is a very profitable company. So it's a little different than this, will we be profitable, will we not? It's a very cash flow, about $1 billion a year of cash flow accretive company. So a pretty unique position in that. But your playbooks do need to change. And it's hard, in hindsight, we're all, Monday morning quarterbacks are undefeated. But, how do you look back? And even in the tornado, what are some of the things we could have done and some of the investments we could have made and some of the decisions? And I think one lesson of that is making sure you're planning for tomorrow. And it's not that people weren't planning for tomorrow, I want to be fair, but at the same time, there's certain investments and bets that need to be made despite what's happening when you have some scale. Maybe different if you're just starting out and you're finding product market fit, you have to be laser focused. We heard some of the CEOs talking about that, focus. But there becomes a point, you're a public company, you're in a different place, and you need to have multi-product, multi-solution, multi-market, and making sure that you're making those bets for tomorrow too.
Yeah. I want to go to you next, Courtnee. By the way, raise your hand if you are a CMO or in a marketing function in the audience. Okay, quite a
I
few.
see very many gray lanyards. I was looking.
Courtnee, I oftentimes feel like CMOs have a really hard job in a very tough environment, right? Because on one hand, you're asking for money to spend on marketing activities, whereas the top-down missive might be, hey, we need to watch burn no matter what, and we need to watch all of our sales and marketing efficiency. Talk to us about the past year at Own Company, but also kind of compare and contrast to some of the other jobs you've had in the past with Apple and others, and Livongo as well.
Sure. So I've been at Own for about 1.5 years, and the years prior to that, we had a crazy year-over-year 100% growth. So 8 years, it was 100% year-over-year. And money was flowing in, it was amazing. Money was being spent. They didn't have a CMO for a couple of years. And so the marketing team had sort of disintegrated, and they were tucked into different specialties within that company. And so when I arrived, Sam Gutman, who had just left, who passed kind of in the ships at the night, he said, Courtnee, you don't have a team, so you need to build. I understand that we need to look at the overall health of the company, but marketing really needs to be shored up. And so, while we're trying to be a Rule of 40 company, at the same time, we're looking at the sales and marketing split. And so, I said to Sam, I have always done more with less. And so, he and Jake Courtnee, who's our CFO, have been very generous in saying, let's talk about what your plan is to whether it's higher headcount or whether it's put together a marketing program that we think will result in something magnificent. We were going through a rebrand, and how many of you have ever gone through a rebrand of a company? You have.
Absolutely.
Even through rebrand. So it's no small feat. So not only is it has a headcount, it's contractors, it's creative, it's also telling the world who you are, and it is a very expensive undertaking. And so whether it was trying to convince and look at data and statistics why when you go through a rebrand, it gives your company a different valuation. So we actually worked with some of our finance partners at some of the big ones that you'd know of, and we said, what would it mean for us to take backup out of our name? And so that's part of why the investment in doing that was something that even in a time where we're trying to be a Rule of 40 company and bring our OpEx down and make sure we're spending accurate dollars against pipeline, and still growing, it was really something that we were able to chase. And so even now, as we've rebranded and we spend a lot of money at events. So events, for many of us, is kind of our major throughput for pipeline. Dreamforce here, we make a showing because we believe in investing in that to not just invest to drive results, but also to build our brand. So we've been able to do that in both cases. However, we also look at what's trending. We have a paid social line item that stinks. Like, our paid social return is terrible, but our organic growth is nuts. And so it's just really keeping your eye on which part of your tools in your toolbox are effective, and don't be afraid to experiment and to take something out for a quarter and put it towards something else. Nothing will break. So that compared to, quickly talking about Livongo, and I know we have a former Livongan here. He walked up to me and said, hello, cheers in the back. When I was hired in January, Glenn Tolman said to me, Courtnee, we're going to take this company public in 6 months. And I laughed. Like, yeah, you and every other founder in the Valley. Mm-hmm. And he was right. And so there was absolute run at this. So we ran at it from a comms perspective. We ran at it from an events perspective. We actually flooded the market with materials, and we spent. We were not efficient, but we were profitable. We were looking to turn that profit to demonstrate to the street who we were. And so I think it's different the phase in which you're in. So right now we are not poised yet. The market's not supportive of taking our company public, and we want to make sure again that we're Rule of 40 and we actually have some structure behind that. But Livongo was wild, and so I think you have to balance at what point is your company in, and are you willing to spend against that?
Thanks, Courtnee. And the title of this panel is a little bit simplistic on purpose, right? We're starting to draw a lot of the different nuances and considerations when thinking about leaning one way or the other. We talked a little bit about macro, we talked about stage, we talked about business model. I want to go back to stage a little bit and go to you, Myles. I mean, you've been at Braze since 2015. You've gone through a rebrand, you've gone through a period of tremendous growth. Can you share with the audience a little bit about how this perception internally of kind of grow at all costs versus more efficient growth has evolved as the company has grown up?
Yeah, absolutely. And I would start by saying, ultimately, there's really no one right answer to the question. It's all about when, right? What's the context? What's going on, either in the world, either in your own funding cycles, either in the competitive landscape around you, and you need to look at all that information and then make the right decision for your business in that moment. So I could say for us, certainly in the early days, we were a New York-based company competing in a very, very noisy market. We had a great product. We had a terrible brand name, but also very, very low brand awareness. And we were competing with a lot of companies based out here that had their billboards on the 101, and they were the sexy companies that all the VCs loved and wanted to be around. And we were kind of a nose to the grindstone. We're going to build great product and go find the right customers and not just chase gold pots. So we always operated very efficiently, but we felt a tremendous amount of pressure to grow quickly because it was an arms race really at that time. There could only be one winner, and we needed to get out there and make sure that we were a well-known player and that we were winning the right types of companies. And we had to make a lot of tough choices along the way. I mean, we struggled to fundraise, so we were every single round until we got to our D, believe it or not. And we have always had this like pressure of knowing that we didn't have endless dollars available to us, yet we had to grow. And I think we focused on a couple things that could help us be more efficient and yet still be scrappy at the same time. One key thing for us always was our partner ecosystem. We never sold through like channel resellers and things like that, but we identified other adjacent like-minded companies that were trying to solve different problems for the same types of buyers, the same types of companies we were selling to, and we aligned with them. And our tiny sales team in the early days was all of a sudden 5, 6, 7 times bigger, and we would refer we actually wouldn't even compensate one another. We just knew that if we pulled each other into deal cycles, if we gave recommendations, we'd both win deals more quickly, and that actually really helped us accelerate. And then I think another thing that we did quite wisely in the early days was we decided that we were going to be the enterprise player in the space, and we weren't going to take the easy way out and just sell to all the mobile startups and the gaming companies that conceptually would be easier deals to win in the early days. And we kind of took the hard road, even though it was quite inefficient for us. We separated our sales teams into commercial and enterprise. We had different talent profiles, different comp plans, so that we could have people that were dedicated on selling to enterprise logos that if we knew we could break in, companies like Procter & Gamble, companies like Disney, companies like Domino's, that the other brands will follow later. So we always had that kind of long-term view and mentality, and we tried to make the most out of the resources that we had. And then just to kind of, I know you want to ask more questions, but just to fast forward all the way through that growth, we had the fortune or misfortune, depending on how you want to look at it, of being probably the last SaaS company to IPO before everything stopped. So we IPO'd on November 17th, 2021, right at the peak. Great, obviously, for the company in many, many ways. Not so great for some employees in a lot of ways. But very shortly after that, everything changed, right? So we had always been pretty efficient, but all of a sudden, we had a gun to our head saying, when are you going to be profitable? And we found ourselves we're coming up on 8 quarters being public, and it's been a completely different environment, and I think we've thrived through it, and I think we've developed some new muscles that are, to the point that was made on the last panel. We're going to be able to maintain all the discipline that we've really learned in the last 2 years, and as we come out of this macro, whenever that is, I think it's going to help us accelerate even faster.
Were you guys a Rule of 40 company at IPO?
We were a Rule of 40 company at IPO, and we've dropped below it since.
Okay.
Yeah.
One thing, I also think it's not just the companies at a stage. I mean, I think we're like, everyone thinks of their company at a stage. As a company at scale, I also think that could be different products are at different stages of where it's maybe growth, you're investing in, you're incubating, it could be different segments, it could be different geographies. Someone mentioned earlier making portfolio decisions, and that's kind of how I think about it. It's almost like you're managing these portfolio of assets, and it's not just where's your company definitely sets the tone for where you're at overall, but then where are these different specifics within it too?
Absolutely. I think Sudhesh mentioned on the last panel, segmentation. He always regrets not doing segmentation earlier. But I want to turn to Sal. Sal, you have such an interesting background. You were an executive leader at many large financial services institutions and transitioned into SaaS over the last several years. So you have a fresh set of eyes on how the SaaS industry, particularly SaaS companies that are venture-backed, operate, right? And you were there during the rise up and then the subsequent kind of lull. Can you share a little bit about some of the lessons learned with your fresh set of eyes?
Yeah, and it does help because I look at things and I come at things with a beginner's mindset. And I find that really helpful and fascinating, talking to people, and today will be a great example of that, and understanding their experience, but being able to ask the whys repeatedly to understand. I mean, one of the things that I've really learnt from my banking background, and to give you some context of that, I had 20 years in investment banking. Then I was CFO for the 3rd largest bank in Australia, and then I was CEO for the 10th largest bank. And, it's all about sort of segmentation, thinking about the market, thinking about who your buyer is, and you are in many of these roles servicing everyone. Your B2C, your institutional, your retail mums and dads and everything in between. And so I think being data-led is incredibly important, but I'm always thinking about this as a portfolio, and you were touching on that as well. I mean, with the direct question of growth versus efficiency, we have very much taken a view that we need to run ourselves efficiently. We had lots of provocations around, $1 million in the bank. If that's $1 million of ARR, that could be $30 million worth of value, and all of those kind of debates with our VCs. But we always had a view that we had to have an underlying efficient business that was very thoughtful. I'm a really big believer that a scarcity mindset is a good mindset. It doesn't matter how much you have. If you are sort of having a glut of funds or revenue, etc., it doesn't actually sharpen the mind. You have to be thinking about how do you get more from less, and that has to be the sport. But what we do a lot of is we remove things from the efficiency equation. So we run like an investment fund internally, and we think about, okay, we're going to run the core business, the BAU business, in an efficient manner, but we're going to sponsor activity out of that. And that sponsorship itself would blow up our core metrics, but let's not dilute that. Let's run the business so that we have these core metrics and people living in this system no expectation of running it. And we sponsor something out here and we measure it out here. And we know at the whole level, it's messing with all our metrics, but the day-to-day is sharp, focused, and people know what is expected. And then we watch that portfolio, we place some bets. They don't all come off. Some of them are larger experiments. Some of them are actually just shit that has to happen, right? To be quite frank, as you're scaling and you're growing, you go, I know I just have to spend money on that. And if I don't, we think a lot about everything is going to break every kind of 3 years. And so elegance is actually getting to it before it breaks, as opposed to hitting the wall and then having to have a clean up. And so, some of it is actually we're just going to pull that out and we're going to invest in it. Yes, it's going to mess with our metrics, but it'll create an S-curve for us. So I guess I probably do come from a banking background and am sounding very much like a banker as we talk about this. But I find that the disciplines are very similar. And, my early days of investment banking, it was all about product. And, what you had to understand was your customer deeply and what would make them pay irrationally more because they couldn't live without you. And so what I've also learnt is, I've been a SaaS buyer my entire life as a banker. And my whole product background is very, very aligned. Like, we are all trying to build products that people will irrationally pay more for and feel like, I don't know how I do my job without it.
I love that. It goes back to the core principle of build a product that your customers love and derive a lot of value from. But I also love the concept of a scarcity mindset. Aaron Levy, who is the founder and CEO of Box, another Sapphire portfolio company, he jokingly said, he's like, oh, thank God when I was raising venture capital money, you couldn't raise these like $50, $70 million Series Bs because I would have just blown all that money, right? But I want to talk about maybe a foil to the scarcity mindset, and that's the competitive dynamic, right? When you're in a market where there's another big competitor or multiple big competitors who are spending like crazy in an emerging market that are taking market share, like we talked about planting the flag, planting the seed, I think Rob mentioned that. How do you think about competition and your ability to want to spend a little bit more in order to get into doors, right? This is a jump ball for anyone.
Well, I'm going to throw this one right out there. So we are a data SaaS protection company that's evolved into other products. And our biggest ecosystem is Salesforce. And we actually are also an ISV partner. We pay Salesforce, that many of the ISV partners do. They sell on our behalf, and they're a fantastic partner. Well, they introduced a backup solution a couple of months ago. And so, kicked us back on our heels. Like, our partner is now our competitor, and they are slightly larger than we are. And so, we had a kind of a war room effort and said, what are we going to do? The sky is falling. And I had about 10 seconds where I threw my hands up, like, there's no way we can compete. And then you spin it and you think, but they're going to use their marketing dollars, which they really haven't. It's a small product in their otherwise very large portfolio, but they're going to tell the world why it's important. And so it's not always bad news, right? So let them use their megaphone and their $100 million budget to tell the world why backup is critical. And then we can actually, as a partner, really round out that story. So it's not always a terrible thing. My other comment on competitive marketing is always taking the high road. You watch companies attack each other, and you're basically just nipping at the heels, and the consumer doesn't want to deal with either of that. They just want to know, what do you do? Why are you the best at it? And why is it going to make my life or my business better? And so if you think back, and I'll grab back to the Apple versus PC ads long ago, where we didn't directly go at Microsoft, but at the same time, everyone found humor in that. And so I think that if you have a main competitor, take the high road. At the same time, have a strategy where you continue to tell the world why you're the best at what you do in a way that is entertaining and could be a little bit frivolous.
Yeah.
I echo a lot of what you say. I actually find it really motivating. I think never waste a crisis. I'm a natural optimist, and so my first reaction may not also be my best. I think that's what
I
you
had 10
had.
seconds.
Yeah, and but it's deeply motivating, and there's always a virtue in there. So they're running a consolidation process, right? Let's have a think about that. They're building out that they're competing in a different way. There's something to be done here. And you're right, them bringing attention to something is really powerful. One of our competitors has just built out its product bench in a way that, in a lot of regards would be considered quite challenging for us. And we loved it. We went, yeah, let's let them be distracted right now, because this is really powerful for us. It creates a moment. And so we really had an intersection of choose, do we join the fray of people going, well, what are you going to do now? I go, no, this is great. Let them be distracted. And in a marketing sense, we were, it was really pleasing because they massively launched their new position. We still landed #1 share of voice, and we're just going, this is okay, right? And I think you can overreact to them. I don't think you can in any way be ignorant of what is going on. But I really love it for the fire in the belly. It's very motivating.
Yeah. I would just add, we think about competition a lot, and our competition is very diverse. We have large enterprise competitors like Salesforce and Adobe that we're trying to displace. Then we have startups who are still living off all the free money that they raised over many years that we're still dealing with. Then we have different types of startup competitors in different parts of the world. Some of them in are low-cost competitors based out of Southeast Asia or India that literally copy our product and our roadmap and charge 30% of the price. And it's really complicated. And we have to decide. Again, we have limited resources. We can only do so many things. What do we focus on? And for us, rather than to your question of if it's one big competitor that you're concerned with, for us, it's actually we think of certain classes of competitors as existential threats, and then we will rally SWAT teams internally across go-to-market product to figure out how to combat them. And in some cases, it's about preventing the innovator's dilemma and the competitors coming up from the bottom that could challenge us. That honestly could be the next AppBoy and what we did to Salesforce Marketing Cloud and to Adobe to a large extent. And then some of those low-cost competitors I mentioned, we're actively working to keep them from expanding outside of Southeast Asia and get a foothold in Europe or get a foothold in North America. So we take, it gets quite tactical, but it's also very strategic. And then we have to decide from a product perspective, what do we think we can kill them with that we're already ahead on? What are the parity features that we need to add just because they figured out a little way to beat us? And they just want to beat us. And we have to think about 20 of them. So it's a big challenge.
The only thing I'd add, it's just being honest about the durability of those competitors. I mean, like all competition, know what makes you great, focus on your customers, bring value. But like, who doesn't watch the competition, right? And so, what can you learn from it? What can you adjust to your own repertoire to make yourselves better? But also, like, how realistic? Like, is it a Salesforce or someone who's not going to go away, but they might get defocused? Or what type of competitor is it? Or is it a startup that has cash that's burning at a way that it's unsustainable? And so you also have to be careful not to overreact. I think is also important in that.
Yeah.
Yes. Yeah, and also sometimes we let competitors do bad deals, right? Where we know that they're terrible deals that are going to erode their cash flow, and that's fine. But if you can make them suffer on the way to winning that deal, even better.
I think though the fixed mindset here is to, think you're in a race with whoever's done something recently. We often talk about let's not have a red ocean bias. And let's remember there's blue ocean out there, and our job is to find that. If everyone's swimming in that space, great. That's not actually our game in town either. And so I think if you allow yourself to kind of let it win the mental game, you actually are finding yourself competing for the same piece of carpet. And, that doesn't need to be the play at all.
I agree, but I do think for us at different moments in time, we went too far on that notion of saying, just worry about yourself, don't worry about the competition. And we let some competitors sneak up on us and win some deals that they shouldn't have won and get a foothold in places they shouldn't have gotten. And I think we've learned from that, honestly, and I think we have a nice operating balance now where we can do the things I was just talking about without losing focus to the point where we're making mistakes.
Yeah. I'm going to open up questions after this one question. Well, actually, go ahead.
Great panel. My name's Christine. I have a comment and a question. My comment, Courtney, I loved your shout out to Elizabeth. And I just want to reiterate that. I hope Sapphire really appreciates the value that this woman brings every damn day to the portfolio and well beyond it. She is an absolute rock star.
Bravo.
And my question is, I wonder your thoughts on how much of hyper growth can be engineered, created, because I've been at companies in both too, and I wrestle with this. How much can we as CEOs truly do all the right things in the right order to engineer that hyper growth? And how much of it is that perfect storm, gestalt of the right things coming together outside the company at exactly the right time? And do you have a point of view for the engineering, because obviously we have control over some things, what are those couple of things to really look at that start that process?
Pandemic.
Yeah, I mean, it depends what hyper growth is, right? And so I do think there is this cross of when preparation and luck come together, like they kind of talk about sometimes. And so in reality, if you're talking triple digits or just some extreme numbers, there has to be these macro trends. Unless you're just talking about triple digits on a small number, that's one thing. But when you're talking about real dollars, the reality is there has to be market dynamics. And it could be cloud. It could be some of the stuff we're hearing about in AI today. The market has to be ready. And there's times, but the reality of it is you also have to give credit because there's a lot of companies that toil and toil and toil, and then all of a sudden, like we talked about the success, they look like instant success. We talked about Splunk earlier, but the reality of it is that takes a long time. Coupa, these companies, the realities of that. And so the right decisions being made, being in the right place at the right time, and I think the intersection of those things. And so there's definitely things that you can control and be there, but you also have to be in the right market at the right time.
Yeah, I think we talk about, he or she, usually she, who is organised wins. And I think you have to be incredibly focused. We talked about it before, put in the work. And then there's moments where you're lucky and you've got to be positioned to go. I mean, Zoom's a great example, right? So, those moments come, you're not focusing on efficiency, you're focusing on, I'm going to catch this wave and then I'm going to play catch up. But underlying it, you have to be bloody organised and be really thoughtful about how you're going to construct your success.
I'll give a shout out to the marketing and comms people, because hypergrowth is also fueled by having a fantastic communications team. So you have to have strong products, you have to have the right market dynamics, you have to have the right team, but being able to have someone or a team of people who can actually tell your story to the population is so important when you are looking at growth.
Yeah.
That's a great point.
Any other questions right now?
So we've been talking a bit about doing more with less. Also, in the last panel, I talked a lot about the people as well, and especially these days, people are getting burnt out. Talk a lot about mental health as well. How do you properly balance the two amongst your teams, keeping people focused on the right priorities, but ensuring that, hey, they're not going to get burnt out either?
Yeah, I'll start. It's really hard, and one thing we've been trying to do is get people back in the office, honestly, because if you do go in and you're with your colleagues and you laugh a little bit, you bump into someone, something good happens, a conversation happens, the serendipity, people are in better moods, and I think it helps offset some of that just stress and pressure that comes from just sitting, on Zoom all day. So that's been a big thing for us. And then, I know you hear this all the time, but really encouraging people to take their PTO and things like that also matters. And then leaders setting examples of taking a vacation, not sending people Slacks at 2:30 in the morning, stuff like that, so people know that it's okay not to respond. And those little moments like that add up.
And just celebrate your wins. They don't have to be massive, but you have to find ways to celebrate your wins. And it can be, you launch a new feature of something, or it can be you have a new customer. But make time to celebrate those wins with your whole company, and make sure you include the whole company, because the other team dynamic is really important. So you're not saying, oh my gosh, the marketing team is always having a party, or the engineering team always gets a happy hour. It has to be the whole group, because you will rise as a team together.
We think a lot about this as a culture company. You'd expect that. And so I think there's an intersection of high expectations, love and humanity, and often high expectations kind of come at the expense of love and humanity. To your point though, I think connection is really important. So we can't avoid the 2 a.m. Slack or email because we're truly global, it's happening around the clock all the time. But we think about what are the work practices by team and by function, and how do we create community in a flexible workplace, because community is necessary if you are having a moment of a loss of confidence and perhaps more junior. You're not going, it's quite courageous to reach out to someone if you're remote. How do you create all these pathways for people to be able to be developed, to feel connected? And then, the tougher your job, the bigger your job, you still need connections, you need the shoulder to lean on, etc. So we constantly, and it's very difficult, right? Expectations can never be met on this, I almost think. But, simply put, where do you find the intersection of high expectation, love and humanity, and you can solve for most things there.
And actually, a quick shout out to Culture Amp, because we are a happy customer. Ooh. But another dimension of this is like listening to your employees and then taking action on the feedback. And we do quarterly surveys. We read out the results. We have all the department heads read everything thoroughly. Then they each meet with their teams and their leaders. Then we bring up the key issues at all hands. And that also creates this notion of transparency and the idea that people, if they're going to be heard, and sometimes obviously they complain about silly things, but it's the kind of culture you want to create.
It's really interesting. I mean, psycho-safety is massive at the moment. All our research, it's the most demanded things from our companies is how do I create a psychologically safe environment? I mean, it's great that it's being asked, but it's kind of also a bit scary that, it has to be asked. But I do think the separation and the period that everyone has been through has made many people feel very unsafe. And
I think it would be wrong of us not to mention the fact, there is a war going on across the world, and perhaps many of these companies, we are an Israeli-born company. And so in times of crisis, it's even more imperative that you get down with your employees and just let them talk. We had an Ask Me Anything this morning at dawn because we just wanted to have our employees talk. We can't solve some of their needs, but they just want to be heard and they want to know you care. And so going back to the psychological safety, we can't change the outcome of what's happening, but we can try to do everything we can to make our employees and their families feel safe and heard and knowing how important they are and that we're here for them because we are one big family.
well, I think it's good now too because people recognise that work is where life happens.
Yes.
As opposed to, there were generations where work was not where life happens.
Yeah. Gaurav, did you have a question?
Yeah, Sally, love your accent.
Oh, thank you.
What a great panel. Thank you so much. And just a quick question on the last few years of overspending. What did you guys spend on that you absolutely loved, had a great ROI? And what did you spend on that completely failed?
Ooh, good question.
We spent a lot of money in the last 3 months. So do not talk to our CFO. Well, he knows. He actually approved it. So when Salesforce came out and said they were launching this, we got together after those 10 seconds and said, what are we going to do? So we put our heads together and we launched an independence campaign. So we found a niche that they couldn't meet. And so we, for the first time in the company's history, bought media. We created the Thirsty Bear restaurant, which is no longer the Thirsty Bear on Howard. We completely remasked it. We made it the go-to for everyone who was coming to Dreamforce, and we bought media. So we've been in the Wall Street Journal, and we're in Fast Company this month. We were in Time Magazine, and so we spent against this. And so we said, you know what? We're not going to be able to build our brand. We're going to have to show up on the map. And so we spent, but we are tracking it wildly. We're tracking the leads, we're tracking pipeline, we're doing a brand awareness study. So you can spend, but you have to spend with a reasonable expectation to find out what it did.
Yeah. I'd say for us, kind of a big bet we made in marketing investment-wise was actually to go to Cannes. The Cannes Lion, it's a big advertising festival. That's where CMOs hang out. And we made a bet that we wanted to attach. You've never been there? Okay, that's where consumer CROs hang out. Yeah, seriously. A lot of rosé. But we made a bet that that we could transcend the sort of utility aspects of what we do in terms of powering messages out to consumers, often for CRM teams and product teams, transactional messages, things like that, to transcend that to be more relevant to brand marketers, and the brand marketers own the bigger budgets. So we kind of early on started showing up at Cannes. It's quite expensive, to your point, and it actually really elevated our brand above all the other competition and allowed us to get access to a level of marketing executives that we didn't previously have. And it was a bit of a tough sell internally to justify it because we had no idea how it was going to go. And we've been doing it every year for the last 5 years. We spend more every year. On the downside, I'm finding the money we spend on analyst relations is has diminishing returns.
Two things that we spent on that I think are the best money we've spent. A couple of years ago, we decided that we would bring our VP layer together twice a year physically. And so we bring the exec team and the VP team together for a week in May and a week in November, one in San Francisco, one in Melbourne. And we had a collective that had, the company had grown substantially through COVID. I met 10 people in the first 12 months that I worked there, right? So, but every time we have that event, we work on our relationships, we work on the development of that group, and we work on the strategy. and it is the best money we spend. And every one of them, we sort of trying to work out. We had all these movie analogies because our founder used to work in making movies. But now we think, every one is the best one, and more comes out of the next one. And so this expectation is sort of going, are we Fast and the Furious kind of series now because there's so many? But that has been the best investment we've made. And, we took that from a group of functional leaders to a group of company leaders who are knitted together, who think like at a company level. The other one's boring, but it is also really effective because we were growing so fast, and as said, everything breaks regularly because what worked yesterday isn't fit for purpose today. We have had a mindset of investing in things that make sure that our cognitive energy goes to the stuff that matters. Because when it breaks, our cognitive energy goes to stuff that doesn't kind of really add value. You're just sorting stuff. And so, we look to invest on the things that make sure our cognitive energy goes to how to win.
I would agree. I mean, anytime you can invest in your people, one, getting good people to begin with, and anytime they can spend time together. I mean, listen to some of the discussion that's happening about, mental challenges and burnout, and like anything that can help fill people's cups, make people feel special, make them feel heard, and make them feel connected, is going to pay back in spades.
Please help me give a round of applause.